Good morning, everyone. Just checking that we're good on audio and visual as usual. And we are. Happy Ticker Thursday. Yes, exactly. It is Ticker Thursday. I'm glad you guys are keeping track of that. We are going to get to that. But I would say let's get started. It's already a couple of minutes past the top of the hour. Hopefully you guys can all hear me well. Good morning to you. Good morning to all of you guys here this morning. Our colleague Joel is also here. I think Christian is here as well, or will be. If you're here for the first time, let's get right to it. I'm Serge Berger from thesteadytrader.com. This is our Set the Market morning call. And what we are going to do is we're going to spend the next 15 minutes or so going through some of the top things on our notepad, which is right here. And of course, this morning we had an important inflation print, which came in line with expectations. So what to do here. Before we get started, as always, anyone that's brand new, please make sure you subscribe to the YouTube channel here. That really allows you to get updated in real time when we go live with analysis and insights and charts and whatnot, and podcasts. And also, please make sure you give us a thumbs up like on every video, leave some comments so that the algorithms are picking us up so we can continue to do this show. Otherwise, we're going to have to shut it down at some point before long. So let's see here. As usual, and today is Ticker Thursday, as I think a Daily Trader mentioned before. So that means if you have a ticker or two you would like us to look at, please let me know, and I'll do my best to get to it as well. As usual, we're going to start off with a big picture chart that at this point I'm sure some people are sick of, but the reason you're probably sick of it is because you're not allocated properly. So here is, in our view, here is your daily reminder that the performance this year is not in Mag 7 stocks, despite some of the really incredible moves that we saw over the past few days. I'm going to give you guys a quick update on that as well. But again, keep in mind that hard assets continue to beat the living daylights out of the Mag 7. Your 401k has probably been completely, essentially, I think, kidnapped is one way I would put it by Mag 7 stocks. So please be aware of that. Doesn't matter whether you believe you have those stocks or not. Even if you don't, the correlation of your portfolio is likely extremely highly to those stocks. So we just want to point that out, that the people that are doing well this year are not the ones that are long Mag 7 stocks. They are the ones long hard assets. We believe that's a 5 to 10 year story that's starting now. Starts between the gambling bubble that we have in those stocks getting overbought, but also more importantly, it starts with a macro environment that's different, with a marginal continued pressure on the dollar and global asset allocators rebalancing their dollar exposure, and that's all that's needed for the inflows to basically stop into a few stocks, and that's going to be a problem going forward. So anyway, that's my sort of sitting on the horse kind of morning rant on that. But what I'd like to do is I'd like to continue and give you a little bit of a view. And again, if you guys have stocks you want us to look at, let's spend a bit of time on those. Any tickers you would like, we'll go through a few of them. You can already start typing them in, so we get to those here shortly. But I do want to show you two things that I think are really important. First of all, I want to remind you quickly, I know this is the boring part for you guys, but it's way more important than anything is the understanding where yields are. And this morning, if we pull up the 2-year yield on the chart, you can see that we're at a pretty critical point. If you remember, I personally went short yields, meaning I bought Treasury futures about a week and a half ago at this point. I can't remember what it was, something like that. Closed it earlier this week because I thought yields could break from about 3.65 down to about 3.5. That happened. I closed those shorts earlier this week, and so that's kind of where we're at right now. I'm going to have to imagine that at some point before long, 2-year yields break below the 3.5 mark. I'm not quite sure we're at that point just yet. So I'm watching the 3.5, 3.45 area very closely on yields. if and when we see enough sort of selling pressure there on yields, meaning bond prices would go up in the 2-year, I'm going to get long the 2-year futures contract again, or one could buy like the SHY ETF or options or whatever you guys want to do. But I do think ultimately the 2-year yield is going to start working its way towards 3%, and that's a big move in the bond world, particularly when you lever those up with futures or options, or again whatever you feel like you want to do. All right. So again, any tickers you guys want to look at, please let me know. Happy to go through. What I'd like to do is I'd like to show you what our extreme overbought and oversold indicator is telling us about Oracle, about Broadcom, and about Google. And for that, I'm going to get right to it. And here are the charts. So our extreme overbought, oversold indicator is currently flashing an extreme short-term overbought. So that's a 1 to 3 week view on this. And you can see last time it got overbought, it basically went nowhere for a while. It didn't go down. That's not the point. It's not saying it's supposed to go down, but the stock is severely overbought right now. Once again, remember, it's a 2 to 3 week view at most. That's kind of your time frame. So for those people that feel compelled to buy more Oracle up here, at least take this into consideration. Same thing with AVGO. This is Broadcom. And the reason that, by the way, I'm mentioning those two stocks is I'll give you a sentence here in just a second that I posted into our Trade Ops members area a few minutes ago. But AVGO, which is Broadcom, is now also extremely overbought according to our indicator. Last time AVGO got this overbought, it ended up dropping about 43%. That's not the forecast. I'm not saying AVGO is going to drop 43%. So that's not the point. But we think the stock is overbought. Now, why does this matter? We'll look at Google in a second, because we did look at Google earlier this week in here as well. The reason why this matters is because the following. And I just dropped this this sentence into our Trade Ops members area, so I'm willing to share it here as well quickly. Yesterday's S&P 500 bubble to fresh all-time highs essentially was driven by 3 stocks. Those 3 stocks are, one of them you're looking at here, Broadcom. The other one, of course, Oracle. The third one was NVIDIA. It drove about almost 40% of those returns. So if it wasn't for those 3 stocks, the S&P would have been down. 6 of 11 sectors were style factors were actually down on the day, and 60% of stocks in the S&P 500 were down almost to 1.5%. So was yesterday a ragingly bullish day for market broadening? Probably not, but of course financial television will lead you to believe otherwise. Now, having said all that, what's important to us is that we continue to respect momentum, which brings me to, for example, the S&P 500, which we have to respect the momentum, right? Because momentum and the ruthless and maybe reckless behavior of algorithms, we have to respect that. As much as I think it's crazy and it's in many ways criminal what's happening, if we want to make money, we still have to respect what the algorithms do. Most people, of course, will only follow the buy signals and will never heed a sell signal, which is why they're going to blow up their accounts over the next 5 to 10 years and their retirement savings. But in the meantime, the buy signals have continued, and the S&P 500, for example, which gave us a momentum buy signal back in April, continues to push higher and is now up 18%, still on bullish momentum. Now, at some point, that momentum will stop. It's clearly not today. It's not there yet. It could change today. It could be the end, but it's not yet a sell signal by any stretch of the imagination from a momentum perspective. So that's why this is important. We also have Google, by the way, in an extreme overbought situation. I mentioned this the other day. And you can see what happened last time we got extremely overbought. The stock went nowhere for a while, and we're now once again at this sort of pretty precarious spot here. We're also slowly but surely moving towards the second half of September. I don't know how that happened. It's crazy how quick this month is going once again. But those are important things. So there's an interesting comment here. Steve is talking about the lower rates being bullish for stocks. That's true. Steve, the problem is at some point, people have to understand why are rates going down, right? And if you've done this for more than a cycle or two, you will see that every single time we ultimately reach a point where people one day wake up and realize that rates aren't going down because things are amazing, but because things are slowing down, right? As long as the algos don't care and we have global liquidity still solid, which we have right now, that works. But one day that does stop because people start realizing rates are going down for not the reason why they think they were down, right? Again, I don't think that's necessarily here today. That's not my call. That's way too short-term a call to make for me. But that can happen rather quickly, right? So you just have to keep that in mind when you look at the market. So anyway, if you guys have charts to look at, please let me know. I'm happy to look at a couple of stocks. One stock that people were asking me about yesterday, and I think this is appropriate to bring up Apple. We talked about this earlier this week. Does anyone remember me talking about Apple earlier this week? Who remembers me talking about Apple? In fact, this arrow is from earlier this week here in the live show. And I talked about that Apple has this tendency to rally into the iPhone announcement and then tends to either go down or at least consolidate. Well, since the iPhone announcement, the stock has now dropped quite materially. And to me, the edge is kind of gone. I think Apple is right back to where it was now about a month ago. So to me, it's just kind of in no man's land, right? So we talked about this earlier this week. We said that Apple typically rallies into the iPhone announcement, and then it tends to pull back or consolidate, and that's pretty much exactly what's been happening. Steve wants to look at Open. Now, I think it's important to understand what Open is. Okay, Open is a house flipping company, right? There might be a trade, probably not a good investment. So if you look at OPEN, what you can see here is a nice momentum trade, and I think that's probably what Steve is alluding to. So if you look at our momentum indicator, we use something called momentum in the market, and we look at OPEN, Open Door Technologies. What we have is a stock that remains in a bullish momentum move. That momentum move is unchanged for right now. We got that signal in July. The stock is now up, about 760%. From our perspective, if I wanted to trade Open, I have a trailing stop currently around $4 and call it 70 cents. And that momentum will continue until it doesn't. It's as simple as that, right? One day it'll change, and that happens when it happens. It's not here, at least not here right now, this very second. Let me see here. And Open, oh, by the way, I should also mention Open pre-market has a big move. It's up about 35%. So for those of you guys that heed momentum, right? So the stock this morning is trading about at $8 this morning. So that's about up here. So that momentum trade continues to work. That's why we like momentum, and it, because of what it does, it takes advantage of algorithms, right? So Open Door Technologies trading up at $8 this morning. That's whatever 35% or something, and again, momentum continues to work here. Which again, that signal came in July, not yesterday, but that continues to work. Then we want to have a look at CLF. Now, CLF is a ticker that James wants to look at, and CLF is Cleveland Cliffs. In fact, let me go to the actual chart first, so we can look at it without any indicators on it. CLF. And CLF is a stock that's essentially been trading along with some of the energy moves. So let me just check one thing here before we look at this a bit more. So CLF, Cleveland Cliffs, is a stock that has a very high correlation right now to the energy space. We've been talking a lot about the energy space undergoing bullish transformations, and you can see a stock that's basically been changing trend and now looks to be consolidating for potentially a move higher. That's the kind of stuff that we like to see from a market leadership, to see if we can get some upside there. From a momentum perspective, I can show you this. Cleveland Cliffs on our momentum indicator. Our trender gave us a buy signal that became valid on the 13th of August, and the stock again is now continuing to move higher. And then John wants to look at IBIT, which is really Bitcoin. So let's have a look at Bitcoin. Bitcoin has been holding what we think is really critical support, but Bitcoin is also in a very choppy phase right now. So if you look at Bitcoin here and you look at it through the lens of a daily chart, you can see that Bitcoin is now more or less at the same spot it was, quite frankly, even in May. So it really hasn't gone anywhere. So, you know, it remains in a long-term bullish trend, but it's stuck. It hasn't done anything. It tried to get above 120,000, then moved to 122,000. But ultimately, the stock is, or Bitcoin, and thus IBIT is kind of stuck in a bit of a no man's land. If you receive our Bitcoin bracket email, then you would see that we send it out every Monday to our clients that Bitcoin is long-term bullish trend remains, but in the near term it's very choppy and quite frankly pretty useless in terms of the near-term directionality. Freeport McMoran, Ken wants to look at that. This is a good one. This is certainly a theme for our energy trade. In fact, let me show you the actual ticker. That's the wrong ticker. Here we go. Freeport Mac, again, you can see it doesn't look a hell of a lot different from Cleveland Cliffs. There's a reason for that, right? So there's a high correlation to sort of the materials and energy space. So if you believe in the energy and materials trade, then a stock like Freeport McMoran is one that we would want to have a look at. And then Cintas Corp, and I don't know what this is doing pre-market. I don't really know. What I can tell you is Cintas Corp is probably going through a phase transition into a bearish trend. That would be my guess. This is for Bill. 1 second, let me look at this one. CTAS. Yeah, I'm not really doing anything beforehand. But let me just show you and see. First of all, there's probably bearish momentum here. So CTAS from a momentum perspective. So let me bring it up here. Yeah, okay, so as suspected, so CTAS has bearish momentum. The free profit target was just reached. So you see that sell signal came on the 15th of August. Free profit target has been reached. The trailing stop is in place. So if I want to be short that stock because of the sell signal, then the trailing stop is currently around $210 or thereabouts. Now, we are doing a special explanation of our trend following model tomorrow. If you guys want to join that, I have a link for you that I can give you. Let me just see where that is, where you can register for that I guess webinar. It's just something that that a lot of people enjoy when we explain to people how trend following works. And I'm going to type that link in. So if you guys go to, okay, that link didn't work. I'm not quite sure why that link didn't work. Anyway, if you guys want to learn how trend following works, just inquire with our team. It's you can just email support@thesteadytrader.com. So that's what you can do for that. What else? Other questions. CL, yeah, so that's so that would be oil, right? I mean, it doesn't matter how we look at oil. We can look at it through the lens of futures or something else. To me, oil is kind of in no man's land right now. I don't really have a good read on oil, to be honest with you. I don't know, of course, what your time frame is that you're asking about, but to me, oil is a bit of a more difficult call here, to be honest with you. So I don't really have a real read on oil. I think we're way more constructive still in the hard asset trade, which we think is going to continue for an extended period of time. So anyway, that does it here for today for Ticker Thursdays and for our Set the Market morning call for this week. Tomorrow is Friday. We don't do this show on Fridays, but we'll be back here bright and early Monday morning. And what we want to do is we want to make sure that we stay on our toes. Again, I think the market here is extremely exuberant, right? That doesn't mean it can't go higher. We want to respect that momentum, like we said before, right? So if you're looking at bullish momentum trades, then by all means, respect that it's momentum, right? And momentum does change. Momentum markets tend to make a fool out of a lot of people that are perma bullish, which a lot of people are. So just respect that momentum continues to be bullish. This is the S&P 500 momentum signal. It remains intact. We have a stop currently in the S&P around 644 would be the stop, and that's it. So thank you guys. We'll see you guys over in Trade Ops, and if you're part of Trade-a-thon, we'll see you over there in about about 25 minutes or so. Thank you, everyone. Thank you, Daily Trader, Bill, Steve, all you guys. Great week, and we'll see you over in the other areas. Thanks so much. Oh, and if you're here for the first time, or if you've never been here before, or whatever, please subscribe to the channel. Please give it some thumbs up, and we'll see you soon.